All right, welcome to the Atlanta Landlord Luncheon. We meet every third Monday of the month, and our goal is to bring you monthly education, market updates, and networking opportunities to help buy and hold real estate investors build long-term wealth. And I'm joined here with Chris Littleton.
Good day, everybody. I'm Chris Littleton, the president of PMI Georgia. We manage properties in the North Atlanta metro area, Columbus, Macon, all the way up into the North Georgia mountains, and been doing it for 21 years. And I've made a lot of people over the long term millionaires, and that's a good feeling. But we're going to give you a little feedback today on what we see in the market because we're working it every day. So
absolutely. And my name is Matt Martin. I work with Chris, and I help new investors or seasoned investors bring their portfolios under management here with us at PMI. So we manage around 500 doors throughout Metro Atlanta. As Chris said, as far north as Cumming, Gainesville, as far south as Macon and Warner Robins. So we know that market shifts and deals don't always come up in the same locale, but we cover a pretty wide area of Metro Atlanta and Middle Georgia, and we'd love to help you out. So we do offer a free rental analysis. If you have a property you're thinking about renting out and you'd like to talk with an expert about what the market's doing these days, we'd be happy to talk with you. Also, I want to introduce Chip Cagle of Longhorn Investments. Chip, why don't you say hello?
Hey, so how's everybody doing today? Hope you're well. This is the first third Monday of the month where we didn't have a holiday or some kind of celebration going on. So hope we got a big crowd here to hear the good news that, hopefully good news that Matt's going to share with us. All right, so Chip Cagle, I'm with Longhorn Investments. We're a hard money lender, direct lender for fix and flip and new construction. On our fix and flip side, we can do 100% of your costs, that's your purchase and your rehab, as long as that's less than 70% of your appraised ARV. We can even go up to 75% of the appraised ARV if you get pre-approved for rental refinance, and I can help you get that. It's not that difficult to do. So love to talk to you about it. You can reach me at 404-216-5599 and can also talk to you about the new construction loan. All right.
All right, thanks, Chip.
thank you, Chip.
And also, don't forget to follow us on LinkedIn, Facebook. Chip's pretty active on. We have a Atlanta Landlord Luncheon Facebook page. We're also live streaming this on YouTube, so there's a variety of ways that you can catch this podcast. But we're a weekly community or a monthly community of landlords and real estate investors, and I think for most investing geeks, you enjoy talking about the market, you enjoy hearing from other investors. And so we're trying to find a way that you can either tune in live or meet up in person. So Chip is at Hobnob Tavern in Dunwoody. You're always welcome to join us for a lunch sometime, and we will have more networking events to come. But for now, let's go ahead and turn our attention towards this market update. So I'm going to back Chip out there. Well, Chris, today we are bringing a market update for the Atlanta real estate market, housing market, rental market. Do you have your crystal ball ready?
I do. I just returned from the broker owner conference in Colorado Springs, and we had the national economist for NAR there, the National Association of Realtors, and we also had the NARPM economist there. And the forecast is things may be flat for a while, but these are the periods of times where you need to buy. This is the time where you make your money, because right now they're saying that real estate's going to, beat out inflation by maybe 2-3%. And that's just on the values as your property depreciates. So, and it's also, you're getting good returns right now when you own a property. So so your ROIs are stable, and it's just a good time to buy. There's a sense of weakness in the air for home buyers, and home buyers are always pessimistic about buying unless they're in the process and they've been approved. You know what I mean? People don't go out. And the economists were revealing that at our conference, saying Since the 1960s, if they interview home buyers, they say, is it a good time to buy? And they say, no, home prices are too high. So
Right.
we've been dealing with that for what?
Yeah.
60 years now.
Right.
People are always saying, I can't afford a home.
Yeah.
But the people that actually are out there buying homes, they're they're a little bit more confident about the market. So that people are always pessimistic about that, but I'm always saying it's always a good time to buy real estate, because real estate is not a sprint, it is a marathon.
That's
and you will make money over the years.
Right, absolutely. Yeah, it seems like when I talk to just the general public, people who have just normal jobs, they're not really following the housing market. It always seems like they're a year to 2 years behind in where the market actually is. And so I think that does create opportunities for investors by staying attuned to how things are fluctuating. You know, for the past 2 years in the housing market, it's really been relatively flat. And the major reason for that has been mortgage rates, right?
Interest rates have been high and slowing the market down, and putting, you would think it would put more pressure on the market, but it really hasn't.
Right.
Home prices haven't really dipped, and they're projecting that they will, we're looking at 2 to 3% this year. So,
right.
And I'm thinking that we'll probably see some relief from these higher interest rates. So right now is really the time to pounce on that. Look for value in the marketplace.
Right.
If you have a good realtor or a good property manager, evaluate those numbers before you get into it.
Yeah, please talk to us before you buy an investment property, because a lot of times realtors, they want to make that sale, and they may be over anticipating where rents will be. And you want to talk with somebody who actively rents properties before making an investment purchase. So currently, interest rates are in the mid to high sixes. Sometimes they're in up around that 7% number for the 30-year mortgage rate. And this time last year, economists were really forecasting mortgage rates would be down in the mid fives, at least under the sixes, and that this would be the year of recovery and things would rebound. And Chris, what would you say the current sentiment is about this year?
Well, there's a lot of uncertainty right there, and I think that's because we're as we know, we're going through a large change in D.C. There's the tariffs have spooked the lenders. The new tariffs have spooked the Wall Street. But I think it's a long time. This is all a long time overdue. As Trump has. The new administration has said they want to shift our nation from a service provider nation into a more of a balanced service and manufacturing economy. And with these new tariffs, we're seeing some of that maybe play through.
Right.
That's what we're all hoping for. Right. Let's root for the home team. Let's get it done. And there are a lot of manufacturing jobs coming to the United States through this new promises of manufacturing jobs.
Right.
And we're seeing money being deployed in the United States. And jobs are a good thing. Jobs mean more tenants or even more home buyers. You need a balance out there. We're all about buy and hold, but when there's new jobs that come online, and the Georgia market is staged for that, man. We're like the economic engine of the South. So as these investors invest in the Atlanta market, these new jobs come into play. Those people usually rent for 2 years or more before they even consider buying a house.
Right.
So it's a great opportunity for us. Jobs. Let's create jobs in Georgia, and let's buy those rental properties, and we'll keep them rented for you. So we're staged for a lot of growth in the rental market.
And for a long time, at least the past maybe 10 years. I would talk to investors who say, hey, why would I invest in real estate when I can easily get 10% in the stock market each year? Is it worth the trouble? Well, there's a lot of volatility going on in the stock market right now. We also have a significant number of baby boomers who are hitting their retirement years. They have less risk tolerance levels. And historically, real estate has been a great way to put cash into an investment. It's recession proof in a lot of ways. And it might be worth some new people considering investing in real estate and rental properties.
Yeah, I mean, I'm seeing cap rates anywhere from 6 to 8%, which is generally what we see in a market like this. And you get a 6 to 8% return on your money with your rents. That makes you feel good. But if you do what we call an adjusted cap rate, where you're throwing in your appreciation, generally you can double those numbers. So if you're at 8%, you're looking at 16% when you take the income that you're getting plus the appreciation. So a 16% return, that's nothing to sneeze at.
Right.
And that's, very easily managed. The key word there is managed.
Right. Absolutely. A lot of people, if you're pulling your cash out of the stock market, you might be looking for other places to put it. In gold, you can't eat it, you can't live in it, but
gold is very speculative too. And if you look at real estate over the last 60 years versus gold, it's appreciated more. You get more value on owning the real estate. But what's missing from that equation, and when you take the rental income and you put it on top of that, that's the icing on the cake that makes real estate better than gold.
Absolutely. Yeah, I think a lot of the American dream is built around the idea of home ownership. And one of the things I like about being a single family investor is, it's something that people want to buy. You're not just selling to investors. Eventually, you're selling to people who want to start new families, who are relocating for work. And so there's going to be a continued demand, especially here in Metro Atlanta, for single family homes and small commercial properties. So,
you should always start off by owning your own home first and then move into real estate investing. That's the way I always looked at it. And my most comfortable investors are the ones that have been in it for 3 to 5 years or longer, because once you've been into it for a while and you own that real estate, it just improves over time. Rents go up, the values go up, that's the great thing. It can be stressful in those early days because your profit margins and your are tighter when you first buy that real estate investment, but your mortgage stays the same. The only things that increase are your taxes and insurance, but your rent surpasses that. So like I said, you're 3 to 5, 6 years into a property, you're happy. You're glad you're into it.
Absolutely. Well, I just want to bring up a few major kind of market moves, things affecting the housing market and the rental market over the past couple years, that if you haven't been paying attention, these are probably some things just to take note of. One, we hear it all the time, the locked-in effect, so related to mortgage rates. So a lot of people got really sweet low-interest loans during the 2020 to 2022 range. So it could have been a 2% interest rate, could have been a 3% interest rate. And then we had the sharpest increase in interest rates starting in 2022. So now we had mentioned interest rates are in the mid 6s at the moment. So there's a lot of people, they refer to it as locked in. They don't want to move because their mortgage is going to go up if they buy a similar house, if they move up, buy a bigger house. So a lot of people have been holding off, delaying a home purchase or a relocation until it makes sense for them financially. A lot of people too are deciding when they do relocate to not sell. They're trying to keep that property as a rental property so that they can continue to enjoy that low interest loan while also getting cash flow from a rental property. So the locked-in effect, definitely we've seen a lot more, a big uptick in what we call accidental landlords, people that never saw themselves as investors, but they are taking advantage of this opportunity to rent out their property. And it's led to an increase in more homes being rented. So there has been an increase in supply. That's not the only thing affecting supply, but we definitely noticed that out there. Also, over the past year, 2 years, we've seen a pretty significant housing, new construction boom. Do you want to share a little bit about new construction?
Yeah, we have quite a few investors right now that have been buying. Right now, it's tapered off a little bit, seeing how the interest rates are so high. But 2-3 years ago, we had new construction programs, and I've had clients that were buying houses back in the early 90s, and they were saying, oh, back then, oh, the prices are too high. You know, we had a really good program with one of the nation's largest home builders, and they were buying these houses for $180,000. Well, they cash flow for them over the years about $4,000 a year, which is not that much but it's still a good return because they had very little money down. Back then, they were able to get an investor loan with 3% down. So their returns were high. Well, over the years, that cash flow adds up, and then they go to sell these houses. Those houses now are selling for like $380,000.
Right.
And those were nice, what I call conforming neighborhoods with HOAs and good amenities, and those are primarily owner-occupied neighborhoods. Those are the kind of investments that do well for you over the long haul. Plus, we're seeing more of that because people have bought their houses nowadays. They've got that low interest rate. They don't want to sell. It's the same influences. Owner-occupied neighborhoods that are and you know, the rents are good in the owner-occupied neighborhood, and those are the platform that higher, like medium-priced home and just maybe a little bit above. That's where you get into when you go to sell, you have an exit market to the end home owner. Right. So that's where you see the greater appreciation versus the lower income neighborhoods. Not saying the lower income neighborhoods are bad, because we help you pick those out as well. And there's lots of opportunities. They generally cash flow a little bit better, but they don't appreciate as strong. And on the other side, on the stronger neighborhoods, they generally appreciate better, but they don't cash flow as strong. Okay. So that's kind of you got to look at what you want, what kind of balance you want. So right.
Yeah, it seems like there's still investors buying new construction properties, but with interest rates being as high as they are, certainly having to put a much more sizable down payment in order to make the cash flow numbers work on that.
Yes, we're looking at 25% down is what we're seeing in the marketplace.
Right.
But it's still, it's still a great opportunity.
Right. Yeah, absolutely. Also, the highlights of new construction, very low maintenance costs for a number of years, increased appreciation as the neighborhood gets more established. So those are some great opportunities there, but it's really seemed like the locked-in effect with a lot of resale homes not going on the market. New construction really stepped in and filled in the gap for at least, I think, half of home sales last year were new builds and new construction opportunities. So another major move affecting the rental market has been, Airbnb, short-term rentals. For a long time, that was the hype. And a lot of people got into that market, and maybe they weren't very good hosts for the short-term market. And then, as the economy slowed down, people are traveling less. They definitely saw their vacancy rates or their occupancy rates going down, and have been trying to shift into long-term rentals. Also, it's kind of a pain hosting an Airbnb. It's a lot of work.
It is.
It's not something you can do very well from a distance. There's cleaning and all sorts of turnover, and so some people just get tired of it and are wanting to switch to long term as well.
Well, I'm speaking from experience. Don and I have a couple, and bringing another one online. But you really have to look at your markets that you're moving into for short-term rentals, or what we call vacation rentals, and make sure that you're in a marketplace that supports that, because the market got oversaturated, and I've seen people put vacation rentals in neighborhoods where I really wouldn't feel safe going in there myself. So why would you want to host there?
Right.
And it doesn't take long for your reviews to point that out to people. Mm-hmm. So if you're going to get into this, get with an expert and make sure that you're in an area that really supports it. It's a nice, safe area.
Right.
And we do well with the ones that we move forward with, but we have other properties that we own that we would not do a vacation rental there, because it's the neighborhood.
Right.
So
yeah. I know a lot of investors also would shift from short-term to mid-term. So they're looking at room rentals. They look at kind of the traveling nurse type of rental where you're doing 1 to 6 months. And I just by nature of my job, people call us up wanting to shift to a long term. I hear a lot of horror stories of people who, they thought they were renting it to a nice tenant for 1 to 3 months, and then really what it ended up being was somebody who was being rejected for long-term rentals and just kind of crashing, this short-term or this midterm renter landlord, and they're having to do an eviction all of a sudden. They have all these damages to their property. So I definitely, if you're in the midterm space, I definitely would be very wary of your clientele at the moment, because as one of the things we've learned, Atlanta ranks #1 for leasing fraud. So there's a lot of shenanigans out there. A lot of investors have really had to tamp down on their criteria of who they're renting to. And it can be the Wild West out there. There's some professional scammers out there who are looking to dupe the unsuspecting landlord. Another thing I want to talk about is multifamily. So Chris, as you drive around Atlanta, you may see these new apartment complexes being built. How has that affected the rental market?
That has affected, I think, the rental markets, including the housing market. There is a huge amount of inventory being delivered. These projects were set in motion 5-6 years ago, from funding to completion, and most of these are being completed. There's very few exits that you go around 285 on, and you do not see these huge multifamily residents going up. So they're picking up a lot of people that are coming into Georgia, and they're also we're starting to see incentives on housing, on residential housing, and also multifamily housing, up to maybe 1.5 months of rent free.
Yeah.
And that's a lot to give away. Not so much on the housing side. If you price your house right now, you should get it rented. The problem is some of our owners want to be a little bit more aggressive. The market is what the market is, and right now this multifamily market is competing with a lot of the houses because they have 3. Some of them even have 4-bedroom units available in them, and they've got these super amenities, and people like the pool, the clubhouse, the fitness center. You don't get that in a house. What you do in a house, though, you do get, you get your privacy. It's a great place. It's more family friendly.
You let your dog run in the backyard.
Yes.
all sorts of stuff. Yeah, I think a lot of people didn't. I mean, Atlanta's a great place to invest, right? And so during COVID, when money was cheap, there were a lot of apartment complexes that got started. Atlanta actually led the nation in 2023 with apartment deliveries. So projects were getting completed, and then what do you do when you build a 200-unit apartment complex? You have to aggressively get that thing leased out.
Yes.
So that's where we're seeing, the incentives, 1 to 2 months of free rent. Again, that's not in every market, but that is in a lot of markets. And it's important to consider because one of the biggest things that affects is small multifamily. So if you have a 6-unit apartment complex, it's very small. It was built in the 80s. Maybe it's a 2-bedroom, 1-bath. It's competing against 2-bedroom, 2-bath with fitness center, pool, all those kind of things. So small multifamily has definitely been affected because it's very hard for you to upgrade those units because you can't increase square footage. You can't put a pool in or a fitness center. So price has really become, one of the biggest ways to compete against those large complexes. Another factor is anybody who's trying to rent out a condo, an older townhome in some of these areas, because your condition is not going to be as new as these luxury apartments with their stainless steel appliances. So price is really your biggest lever. And so a lot of investors having to reduce price from what they were getting currently if they have a new vacancy in order to compete with these multifamily projects. However, this year, most of those units are going to be absorbed. So that's probably the silver lining, is that there's not a lot of new apartment construction coming right now. So most of the projects have already been built, they've already been delivered, and they're trying to get leased out. And so most of them in the multifamily space, they anticipate those units to get completely leased out this year. So that will absorb a lot of that inventory and a lot of that pressure that we're seeing on other parts of the market. But traditionally, single family homes have not been affected by multifamily, just because single family is seen as an upgrade from your typical apartment. But in some areas, it's definitely appealing to see 2 months for free rent. And I think for young adults and smaller households, it's definitely appealing.
I'm amazed at what they're asking for rent on some of these multifamily units. Like I've seen some 3 and 4 bedrooms going for over $2,000 a month for an apartment.
Mm-hmm.
So it's not they're not giving them away. They're giving out really good incentives, but they're holding their line when it comes to pricing, which means that our rents are not suffering from this. They're just flat.
Right. Yeah, that's an important thing to pay attention to. Well, cool. Well, Chris, I do have some slides I'm going to bring up. This comes from John Burns Consulting. So they track multifamily, also all these big build-to-rent projects that you might hear about. But they do their own analysis. And here is an interesting graph that they have provided for us. So it's on home purchase sentiment. So they're comparing how people were feeling in the fourth quarter of this past year to the first quarter of 2025. And this is the percentage of households who believe now is a good time to buy. So the number of people who think now is a good time to buy has gone down, as well as the number of households who expect home prices to increase over the next 12 months. That has also gone down. So what are your thoughts on this, on consumer sentiment?
Well, I think there's a lot of disruption right now out there in the marketplace. The interest rates being one, everybody was expecting the interest rates to come down, and they haven't. So, but these same numbers, if you look at them consistently over 60 years, people that are looking for houses, are thinking about buying houses, it hasn't really, it's always been low.
Right.
People always think houses are overpriced, and I don't think they are. Right. And they always think it's harder than it is to get a loan.
Right.
Probably the easiest time, the time this sentiment was probably the easiest they felt to get it was back in 2004, 2005, 2006, when, you could get a what they call a no-doc, no qualifying loan. You just, all you had to do was sign your name. They give you a set of keys, But we know what that got us into. So nowadays, the loans are more qualified, but the people that are pushing forward, it's a great opportunity to buy, which keeps the foreclosures down, which makes the market a lot more stable.
Right. So. Yeah. And I think it's important to note too. There's a difference between whether it's a good time to buy or whether you can afford to buy. I think if you can afford to buy, it's a great time to buy right now, because there's a lot less competition and there's a lot more sellers who really need to sell. They got transferred for work. They can't carry 2 mortgages or rent and their past mortgage. They really need to sell their property. So there is a lot more of that kind of little bit of distress building in the market. And so if it works for you to be able to buy a home right now, I'd say get out there and buy a home. Right
now, this is a good time to buy, because the market really is flat.
Yes.
And it's typically not. We usually see 6 to 8% appreciation. So right now, when you're dealing with a flat market, like I said a little earlier, they were calling this the era or the time to the millionaire maker, because of the market cycles that we go through in real estate. This is where people should be lining up. Investors should be lining up to buy properties because of where we're at. And as far as home pricing going up, I think, it's going to be flat, or it's going to be under 1% maybe of appreciation, but that's not going to hold up forever. If inflation takes off, home prices will follow. That's typically what you see. So I don't see values going down.
Especially if we start to get some quantitative easing and maybe some economic stimulus coming in that makes those mortgages rates come down. There is a lot of pent up demand out there. A lot of people who want to move, and just the numbers haven't worked for them. But as soon as the numbers do, you're going to see home prices jump again. So again, if you can afford it, this is a great time. All right, so this is another slide from the same group, John Burns. From an investment standpoint, do you believe it's a good or bad time for someone in your area to purchase a home? So they have these different sentiments broken down by average household income. But the majority of people think it's a bad time to purchase a home. And, one of the things that brings to mind for me is, Warren Buffett's, old Mr. Market analogy is like, when Mr. Market is ready to sell, that's the time to buy. And so, I think there is this emerging sentiment, this pessimism of people thinking, oh, it's not a good time to buy. But that really doesn't have to do with the facts on the ground about the actual housing market. That's just about how people feel. Money's tight. There's a lot of uncertainty, and so they feel less confident about the future.
Well, when people are running away from the market, that's when you should be looking at the market and looking for value and buying, because that's when the value is there. When people are saying, oh, it's a great market, that's when everybody's out there buying.
Right.
And that's probably a good time to sell. You know?
Absolutely.
But as far as investor goes, so right now with the market, with these very statements, it's like, it's a good time to buy.
Right.
And it's like, even if you have to get into that higher interest rate, you still should be looking at your cash flow and making sure cash flow is king, making sure that I can afford this, because if the interest rates go down, there's always a possibility of you refinancing that property in the future, and maybe even getting some of that mortgage insurance removed, because the values would have gone up.
Right.
So
and more now than ever, you make your money when you buy. That's one of the things I have to remind investors over and over again. If you overpay for property, and you have an insane mortgage rate that's like $3,000, but rents are at $2,000. We don't have a magic wand that we can wave to all of a sudden make your life easier. You have to buy a property at a discount. You have to look for those deals, and the numbers do need to cash flow before you buy, right? So that's really important when evaluating, just like any investment. You want to evaluate the property, how much you can rent for, and what your exit strategy is. So that when we say it's a good time to buy, it's a good time to buy a good deal. And there's probably a lot more deals out there than there was a couple years ago, when everybody was trying to sell near the top. So definitely something to consider. Well, Chris, we got a few notes in here. I need to try to make this a little bit bigger. About the rental market. So we got one here from some information from Turbo Tenant on here. You want to share?
Okay. Turbo Tenant reported that the average number of leads, the average days on market, and the average price for medium sales price, medium homes, security deposits, and lot livability were down.
Okay.
Yeah. And so, that's in the Georgia market.
Right.
So, this is, so that means that you're going to get a greater return on your investments as you're buying properties, and, also Georgia is the 8th most populated state in the United States, and it's growing. So our economic forecast is great. So home values will be increasing. Investors can expect a great return on investment on their rentals, whether they're located or in a thriving city or even in some of the small towns around Georgia, which is some of the areas that we pick out. We have a pretty good footprint around Georgia, and we pick out some pretty good markets that our investors are doing well in.
Right. Absolutely. Yeah. Georgia is still a great place to invest. When you think about hurricanes and storms and things like that, Atlanta is relatively safe, has been a good safe haven so a lot of people have been moving from those areas. Economically, a lot of companies are moving their headquarters here. And so long term, it's definitely a wonderful place to raise a family, great for workforce housing.
Yeah, we have a market here that's right probably in the top 5 for doing business for businesses, which is important. And we're usually like 5th or 6th on the Fortune 500 companies, So, and we do have what we call a macroeconomic platform. Atlanta services the Fortune 500 companies, has the Federal Reserve banking located downtown Atlanta. The Fortune 500 headquarters are located around 285, and the manufacturing and distributions all over the Georgia footprint. So jobs.
Right.
I mean, it's, we're ranked great with transportation. We have the world's busiest airport. We have the world's third busiest port in Savannah. I mean, the United States' third busiest port in Savannah. So we are, it's a great economic platform to invest in.
Right. And it looks like they recommended a few markets around Georgia.
Yes. I think Augusta right now is leading the market, and then and then you're looking at Decatur and Marietta. I love Marietta. I love Cobb County, where I was raised at. Decatur, we have issues in Decatur but it's still a great platform. But I like some of the outlying cities where the values are reasonable and the rents are great.
Right. Right. And I was just going to say, with Decatur, the CDC is there. Just had a lot of layoffs.
They did. The CDC chose Atlanta for a reason. Where for some of those reasons you mentioned earlier, we don't have earthquakes, we don't have floods, we don't have fires, and we don't have hurricanes. So we're a safe platform.
So what are some other markets? I know we manage in some other places, but what were some other markets that you say should definitely be up there for out-of-state investors to consider?
I like Macon. Macon, we've been, and Warner Robins. But it's a smaller market. But we've done well for our investors down there, and there's some value adds, and there's some value adds we're seeing right now where investors are buying them and fixing them up and moving tenants in. Right. We're going to see more along Warner Robins is a military town, Air Force, big there, and for every Air Force job there, it creates like 6 other jobs. Right. So it's just a good market. Plus transportation's throughout, Georgia. So I like Macon. I also like. There seems to be a lot going on up in Cedartown. There's a big battery plant manufacturing going up there. Just a lot of jobs. There's a lot of recreational jobs around there too, because there's one of our Altoona lakes up there, and a lot of transportation jobs. Right. In the city of Macon, there's a lot of state jobs, government state jobs there too. Right. Colleges, opportunities there as well. So, and I would say. And housing prices is a lot less there. I would say South Macon probably focus on more than Macon proper, right? There's a lot of new construction, new development going in South Macon towards Warner Robins. Yes, and we're seeing some of those opportunities come up as homeowners. I do see an occasional foreclosure come up. Some homeowner moved down there in some of the newer neighborhoods that we're targeting from the from the builders, and now there's an opportunity to buy a foreclosure. Foreclosures are not a big fire sale like they used to be, but they are a good opportunity if you could snag one and get it under contract. They focus on owner occupants before they focus on investors. But if they feel a need to come to an investor, you're probably going to have a little value there. Right. Absolutely. So, absolutely. And you've got that opportunity. You're buying a newer home with lower maintenance. Right. And the neighborhoods are still holding together fairly well too. And you also pulled some information from Redfin on the housing market. Yes. The nationally the median price point home is around 306. In the medium high price point homes in the Georgia market, Atlanta is probably leading that at $312,000, which is a little bit more than the median price point home nationally. But you're in a major metropolitan area, and rents are higher in Atlanta on those top quality homes. Right. So you're still doing fine there, and you can see that appreciation will be stronger in some of those markets in Atlanta. And some of those markets in Atlanta, you have to be careful with. You need to know it's street by street in Atlanta. Then you get into some of the average ones like Augusta. Their average price is $132,000 for your medium priced homes, and that market's been a good value add. We don't manage there, but I can refer you to someone if you're interested in that market.
Right. Absolutely.
So it can help you there. But you're looking at these same kind of numbers in Macon or even up in Cedartown and some of the other markets. Covington, we do quite a bit out in Covington too. Covington's been well for us.
Yeah.
So and you're also looking at the median price point, the median income for a household in Georgia is 47, and nationally it's 48. You take those two numbers, people can afford to buy our houses in some of the outlying markets a little bit. They're more affordable,
Right.
We do.
Yeah. And I was just going to make a note too. That's another thing that I think new investors don't take into consideration sometimes, especially as they're looking at some of these peripheral markets, that the average household income may not be as high as they think it would be. And closer into Atlanta. So it's important to pay attention to when you're anticipating, because in order to qualify to rent a property, you're going to have criteria. And so, for example, at our company, we require 3 months or 3 times their take-home income in order to qualify for the rent. So, for example, if the rent is $2,000, then we're looking for their take-home income to be about $6,000 each month. So some of these markets, they might not have that much income. So you need to be considering an investment that has a lower rental price as you're considering that. So you definitely don't want to buy a luxury property in a small working class town, because nobody can afford to rent that. If they could afford to live there, they would buy it themselves. That's one thing to consider as you're looking at some of these outerlying areas.
Well, I mean, I tell you one thing too. Also, is trends on security deposits. Mm-hmm. Security deposits right now in an Atlanta area, it's gone. The average price or asking for a security deposit has gone down 54%. A lot of it has to do with the inventory and these new construction properties that we're talking about. They're giving incentives for people to get in.
Right.
We haven't came down off of our incentives for our tenants, but we have also came into some programs that we can allow our tenants to offset that big upfront cash required to get into the property through some other programs. It's not necessarily giving away their security deposit, but it's deferring.
Yeah, that is one thing to pay attention to, is in this market where it's been more of a renter's market. So renters have options as they're touring multiple places to rent. Some investors have lowered their criteria, and that really can come back around to bite you in the end, because you can end up with a non-paying tenant and all those kind of things. So we continue to hold our very strict criteria. And that has resulted, at least for us as a company, less than 1% of tenants we place go to a full eviction and set out. So that we feel a lot more confident sharing with investors. Our track record, our job is to collect rents, and if they
less
stop
than
paying,
half of a percent, to be honest with you. So, I mean, screen well, save yourself a lot of headaches, but don't open the door to some of these schemes to get people in the door, because if you get them in, you may have a hard time getting them out.
That's right.
So, also I like this, they talk about the livability score, and there's 7 major factors to livability scores, and one from 0 to 100. And Georgia, we have scores in the high 64s, and our highest is Lawrenceville at 751. That means that people come to Georgia, they love living here. It's a great place to live.
Right.
So there's a lot of factors that go into that, but that livability score makes it a great opportunity for you to invest, because people are moving here and they want to stay here.
Absolutely. Real quick, as we're approaching the end, I did want to run through some live stats from our FMLS. So that is there's 2 MLSs here around Metro Atlanta. There's Georgia MLS and FMLS. FMLS has provided a lot of stats and visuals for us, and it definitely caters more towards Metro Atlanta, towards higher price homes. So you'll notice this information is skewed a little higher than Georgia as a whole. But median sales price in Metro Atlanta, right around that $430,000 mark. And you'll notice really over over the last couple of years, housing prices have really been flat. So there's a chance if you bought at the peak in 2022, in some of these areas, you might not be able to sell for what you purchased it for. But for the most part, you'll see that kind of seasonal cycle. Home prices are still holding, even though there's a lot less transactions happening these days. Home prices have remained pretty steady. Another important stat to look at is the number of homes that are for sale in the Atlanta area. So I have this decade-long timeline here. So we really are back to pre-COVID numbers as far as the housing market and the number of homes for sale. And it's really lending itself more towards what we would refer to as a balanced market, neither favoring the buyer or the seller. But we'll look at some more info in just a second. So about 24,000 homes for sale currently. Median days on market. So this is another important number. So the days on market refers to the number from the time you list the home towards the day it goes under contract. And so in Atlanta, that number was approaching about 25 days over the winter, but now it's back down again with the spring market. So people are out there buying. Also, we have the average percent of the last original price. So this is showing you the percentage that people offer versus list price. So if you see back in the heyday of 2021 and 2022, people were offering above list price to be able to get that home. And now we're seeing the numbers come back down again, but really about average. So it fluctuates in there about 97 to 98% of list price. So nothing drastic happening when people are making offers. It's just a little bit below list price. But a lot of times people anticipate that, so they list a little bit above what they would take.
Yeah, and we're going to see this is very seasonal if you look. So those
Right.
big dips are dips, generally not big dips, but dips are around the winter season,
Mm-hmm.
and then it goes back up. So you're probably going to see this reach back up there to what we call the 98% range, or maybe even the 100% range. But a lot of times
Right.
people get in trouble. They list their house for more than it's worth. So if you have a balanced realtor that's telling you the market numbers and what you really should be able to list it for,
Right.
Then this is setting the expectation for owners.
Right. And really, I think a lot of seller concessions right now are offering cash at close to help the buyer either close on their loan or buy down their rate. So you're seeing a lot more of that kind of give and take in the offer process right now. Mm-hmm. Another big thing I like to watch is this monthly supply of homes for sale. So this has been climbing for us lately. It's almost up to 4 months. But again, 4 to 6 months is a balanced market.
Yeah.
Where it's neither favoring the buyer or the seller. It might favor the buyer just a little bit more. And again, there is a seasonality to this. So you see, the inventory usually peaks about summer to late fall, and then it starts ticking down again as homes sell off. But it's, this is looking at March numbers. And so I expect it to continue to rise above that 4-month mark into the summer months, but it'll come back down. So nothing crazy on the inventory side as far as homes for sale. So this is a comparison over the last decade. So you see, inventory wise, we are kind of approaching we're above the pre-COVID inventory levels. So a little bit high there, but that's because we have
and also what skews this is the 2012, 2013, 2014 years. Those were hard qualifying years. Banks are selling off their REO and inventory, and so the supply was up.
Right.
That was an economic disaster.
Right. Absolutely. Closed sales. So this is also an interesting to watch is the number of homes that have sold, the transactions that happen each year. So it's a little hard to read. Looks like kind of like a heart rate EKG on there. So this one's probably a little bit easier to read. But we actually are at a pretty historic low in the number of transactions happening each year. So it's a little bit of a stalemate in the market as far as people, not as many people wanting to sell and also not as many people wanting to buy. but there's still plenty of people out there buying and selling.
That's created by somebody who has a great interest rate. They're like, I don't want to sell my house. I've got a great interest rate because I can't get another interest rate that well. And and it's also compounded by the fact it's like there's no great interest rate. So if I'm a buyer, I have to really consider it hard on what I'm buying, and and I'm looking for value in the housing that I'm buying. So there's those two factors have put us in that stalemate, but we're still in a balanced market. 3 months or less is a seller's market. 6 months or more is a buyer's market. So we're right in the middle. So
and that's why home prices have continued to stay the same. So I won't jump into that.
That's a long one there.
Yes. So final takeaways. A lot of times when we do rental analysis with investors, one of the biggest things we're going to look at is currently for rent inventory. It's really hard to track because a lot of properties that are listed for rent aren't being put on the MLS. They're being put on Zillow. They're being put on other sites. And so it's hard for us to get really, accurate numbers. And so one of the things we have to do is we just do an active rental search in these different neighborhoods and different markets. But overall, inventory is pretty high. And it really depends on the area of town you're in, especially if it's an area where the Wall Street companies, Main Street Renewal,
Blackstone,
all these companies that we're buying, there are certain areas of Metro Atlanta where they have a lot of properties for rent. And so it's really hard working with investors in those areas because you're competing against just a lot of choices. And the best way to get under that is by being able to lower your price. So Chris, do you have any takeaways for investors right now? Maybe they're facing a vacancy and having to recalibrate rent lower than where they had previously leased the property. What are some?
I can recalibrate you real quick. Okay, I actually had a property that came up not too long ago, my Broadley property. So it did, and we had tried to sell it, and we didn't meet the number that we were wanting to sell it for. So I said, well, let's put it back. Let's not sell. It's not a good time to sell.
Right.
And so what I did was I looked at and evaluated the market. There's probably 15 houses in the immediate half a mile radius of my unit. And so I made sure my property was top notch. It looked good. The photos were good. The condition was good. I put it out there for $50 less and I rented it in a week. But I came to the realization that, I'm not going to sit on this because if you lost revenue, kills you in this business. I'd rather catch them on the renewal side of things than try to raise the rent there. But, even with that, I still stay balanced with if the tenant can afford it, because turnover kills you. And this turnover did hurt us because we tried putting it up for rent for sale for 3 months. And we did get a couple of lowball offers, and I'm like, well, that just says, and there's a lot of inventory for sale too. So I said, well, this is not an opportunity for rent. So just look at if you're in this market, look at your competition, look at your condition of your property, and look at your price.
Right.
Because those three things line up: the market, the condition, and the price line up. You can get your house rented in less than 30 days. And that's what I did. I looked at it. I've studied it. And if you want and we're happy to do that for you, because the one thing that we want is for your house to get rented if you're one of our clients.
Right.
So, but clients, sometimes they have their own expectations. And a lot of times with these new homeowners, they're emotionally attached to their property as well.
Right.
So your mortgage, and your mortgage has nothing to do with what the rent would bear. Your cash flow has nothing to do with what the rent would bear. It's like we have investors that, they're paying more. Their debt service is higher than it should be, and it really doesn't reflect what the market rents will take. So that's the one thing that you need to realize is if you're going to be buying a property, weigh those three things: the condition, the price that you're renting it for, and the market. And those things line up, you'll get a quick rent. And so
absolutely. Yeah. So, this, I think a few years ago, it was pretty easy to be a
Yes.
landlord because rents were on the rise. You could buy a property with pretty cheap debt service. And so it was easy to cash flow. And now we're in a market where things are a lot tighter, right? Rehab costs are up, your insurance costs are up, your property taxes are up, and rents may be down in your particular area. So this is really a time when it's important for you as a landlord to stop the self-inflicted wounds.
Yes, there's
yeah,
and leasing fraud is up.
yeah,
I mean, we catch a lot of bad applications.
right,
Some areas of Atlanta may have 10 applications come in and only be able to approve one. So
right.
leasing fraud is up. So you got to screen well.
Right. That's probably one thing I think investors. It blows my mind that you have investors who will spend hundreds of thousands, if not millions of dollars on real estate, and then they'll cheap out when it comes to the management of the property, and they think, oh, I'll just do it myself, and they go off the Zillow applications, and there's not much screening that happens. They put somebody in their home who tears it up, stops paying rent, and it costs them, thousands of
Tens
dollars.
of thousands of dollars.
In eviction costs, lost
Yeah,
rental
right.
income, and then your rehab. So,
Yeah.
there is a learning curve in this business, and we can really help you avoid a lot of those painful lessons because
we've done a lot of landlord rescues.
Yeah, you've learned it.
And the reason I know a lot of these things is because I've been there myself. I am a real estate investor. I still have rental properties. So
Yes.
So that last lesson when my property came through, I'm like, I'm looking and I'm going below the market rents that are indicated.
Right.
And I'm providing the same quality of property, and boom,
Right.
it hit.
Yeah. And I think one of the biggest shifts, especially for the accidental landlords, the people who have been relocating and trying to keep their property as a rental, you do have to think from just being a homeowner to running a business, right? And a lot of times, a business doesn't cash flow in the first year, right? You need to have that long-term perspective that you may not be able to get rent to cover all of your expenses in the first year. But we're not always going to be in this market. Rents are going to go back up. The economy is going to rebound. People are going to feel more confident. The inventory is going to tighten up again, and then that's when you're really going to start to see the rents go back up again. It is important to buy it right, to make a good financial decision. We're not financial advisors. We're just property managers and realtors. So it's important to take into consideration that a deal is not always a deal for you, and you need to talk to the right advisors before making that purchase.
If you're getting into the real estate business and you're wanting to be a landlord, you need to talk to a good property manager.
Right.
Somebody with experience. 23 years I've been in this business, and I've seen every market come past me. Mm-hmm. And in every market I'm buying or selling, and I have investors buying and selling.
Right.
But right now the market's flat, and I think it's going to go up, and this is a good time to buy.
Right. Absolutely. And again, from my perspective, the hardest conversation I have is trying to kind of temper people's expectations about what they can get in rent because their realtor told them this, or they use, some rental analysis website that kind of pads the numbers. And so it's really important because every market's different. Every market's unique. And so what you can actually get in rent may be different. And it may be a niche market where rents are significantly higher than the surrounding area. But I would just recommend caution during this economic cycle.
Right. We're quick to make adjustments. If we bring a property in, we think it's going to rent for something like this, for a certain price, and we don't get any traffic flow. Right. Generally, how high are we? There's a couple of indicators you like using.
Oh yeah. If we're not getting any showings, then we're at least 10% too high. I mean that's reality. If you're getting some showings, but not enough to really. We want to see 10 showings in the first 2 weeks. If we're not getting 10 showings and at least 2 applications, then we really need to look at a price reduction or some other incentives in there. So we could be in the ballpark, and it may be $50 or $100 is what it takes to get those number of showings that we need. But we do, we decline 80% of our applications because it's bad credit, fraudulent, uploaded documents, all those kind of things.
Right. So, but yeah, but making those adjustments up front saves you in the long term because because all that savings you have on your holding costs.
Right.
So,
yep. And placing, just like buying it right, placing a good tenant can save you a lot of money.
Yes.
Having a tenant that stays on average of 3 years, who pays every month, that's the goal, because it reduces your turnover costs, your vacancy costs. I hear just a lot of horror stories from do-it-yourself landlords, from people who used a kind of one-man band property manager who stopped collecting rents or hasn't been paying attention to the accounting. Again, if you're interested, we would love to talk with you, but I think we need to wrap it up here.
Yes.
Chris, thanks so much for joining us, sharing your insights on the market. It's been a blast to kind of look at it each day as we're going through things. I'm going to bring Chip back in, but yeah, who knows, as this market continues to evolve and how things will shake out in the economy, but long term,
we're going to be seeing some appreciation.
Yeah.
I mean, if we see inflation, houses are going to outpace that.
Right. Absolutely.
So, and if you buy now, you can refinance later as I expect that we're going to see drops in interest rates.
Right.
So,
could be sooner, could be later. Who knows? But in general, the Atlanta market is holding pretty strong. And eventually we'll get to a place where things start going gangbusters again.
Yes, we will.
That's what we're looking for. Chip, any final comments for us?
Hey, so I just wanted to remind everybody that our next one will be May the 19th. And you can either join us online or you can join us here at Hobnob Tavern near Perimeter Mall. And love to see you here in person. We do have networking before and after the speaker. So it's a great place for you to meet fellow investors. All right.
That's right. Yep, that's right. I learn something every time I meet up with other investors. There's always different niches and things to learn about that can help sharpen the axe for you. So thanks for joining us, guys, and we'll tune out for here.
All right. Everybody have a great spring.
Thanks.